Hey guys, what's up? Welcome back to Royal Blu FX. In today's video, I'm going to do a recap on all the trades that we've taken as of last week, which is a Friday on the 4th in October. So definitely go check us out on those trades just to follow and see how we've done it on your end, okay? And if you're a new member to this channel, go ahead and right now and subscribe to this channel because we always leave out free content on this channel. So let's begin.
Gentlemen, the King!
Alright, you guys, I hope you guys are learning a lot from these recap videos that I'm releasing, because I do them I try to do them at least every single day or every other day, just so you guys get a lot of the knowledge in terms of how I'm taking trades and how you guys can also take the trades along with what I'm teaching you. Okay, so let's begin. So right now we are on the 15-minute time frame. A lot of you guys know that I scalp, so and I trade the US30. So we're going to focus on this area here, which was Friday the 4th on October. Let's go over here and cut the market over here, and so we can reduce the data here. All right, so typically when I start trading, I'm looking for the liquidity or for the direction on the higher time frame. I also look for structure, right, amongst other things. So in this case, we were seeing this area here. When I zoomed out, I could clearly see that we had a clean break structure. Now, some of you guys may do this a little differently, but you know, when I typically scalp, I'm just trying to work with data that is given to me right now at the present time, right? I'm not trying to work with data, a lot of the data that's too past in the past, right? So what I typically do is I just looked, on the 15-minute, just right around this area, just to kind of get a good feel of where the market is. And right now, we can see that prices are bullish, right? So once we saw this, we just scaled down to the 1 minute immediately, and then we wanted to get a look and a feel of what is happening here behaviorally. Okay, so right at around 6:30 is when I start trading, and you can see right here where it says 6:27. So about 6:30 is when the open of the New York session begins, right? So I'm gonna come over here and delete the market, so you guys can kind of see what I'm doing here, okay? So before the 6:30 happens, right, I get on my computer around 6:15 just to kind of quickly, analyze the market, mark everything I need, like liquidity, structure, supply and demand zones, right? And so right here you can clearly see there was liquidity marked over here. We just had a clean break of structure right over here, and knowing that whenever you trade US30 generally has a lot of liquidity taken out before the market goes in its direction, right? And so there's a lot of manipulation happening. The market just starts taking out both suppliers and or buyers and sellers, right? So right here, once it was 6:27, we're pushing at 6:28. I was all the way down on the 5 seconds time frame. 5 seconds is my my entry time frame. All right, now let me zoom out here and show you what I'm talking about here. So right here, when prices pushed bullish here, you can see that it was 6:25. We were reaching at 6:28, right around here. Now, sometimes what's interesting about catching the US30 is that sometimes when the US30 opens, it already has mitigated either a supply or demand zone, okay? And then prices just start taking off immediately, like continue in that intended direction. So what I like typically doing again is going at 6:15, about 6:15, and start analyzing and then looking to see if there's an opportunity that I can take advantage of in terms of a setup that the market is presenting to me. So that way I can take advantage of the 6:30 open, okay? And like I said, when the 6:30 open happens, prices generally continue either manipulate, a supply or demand zone, and or just is already continuing in that intended direction already. And I'll show you what I'm talking about here. So right here, there's a lot of liquidity. You can see this was a failed supply zone as well. Prices went above, took out that liquidity, and started pushing bearish. This is our aggression area, right? So when prices showed us that aggression, it gave us that chalk. And then I was just waiting for prices to get at this high, right? Notice I covered this high just in case prices get above higher, right? So this is about 6:29, right? So I'm waiting for 6:30. I entered here immediately. As soon as prices tapped the supply zone. I entered here, and now I'm in the trade, right? I had my supply zone right at this high, just like here, right? Like very relatively close to this high, right? And then as soon as this came out to be like this, watch this. So I entered. Prices are now very static. They're moving up and down very aggressively because the US30 is taking out other liquidity, right? So you can see it's 630 right now. When I have my cursor here, it's 630 right there. You can see how prices are just jagged. They're going up and down, taking out all the forms of liquidity right here. Like there's liquidity here, right? There's more liquidity right here. So it's taking all those buyers and sellers who were just entering the market right when the market was opening. All right, and so this is what happened. Price went right up quickly. And if you know me, you know this, that I don't usually put stop losses. I don't usually put stop losses. And for the mere fact of this scenario where price goes up like this, takes out your stop loss and then continues in a bearish direction in this case, right? And the reason why prices went up here, guys, is because if you see this here, this is all liquidity. There's a lot of sellers that are selling here, 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 and here, right? So this gave a natural intention for the market to take all this liquidity, clear everybody out, and then just go, right? So what I did was I didn't panic when price took me out, because honestly, prices go really quick here. They go boom, and they just take you out fast. And you know, everything's fast, right? So either you're in it or you're out of it, right? Or either you're all in or all out. I'm all in, so pretty much I'm stuck in this trade, and I knew that prices should go bearish here based off of this liquidity right here, okay? And knowing that the fact that when we had this price going bullish here, we were just breaking above structure right over here, okay? We were just breaking a high. There was a lot of liquidity here, here, and here creating, so we knew that prices should go bearish. So what we're doing is targeting internal liquidity for prices to go bearish. And so luckily, when prices, look at that, again, it can't try to come up here and take me out again, right? You can see that. The markets are very vile and crazy. All right, so we're in it. As soon as we break structure here, I'm break even, and I'm also taking partials, okay? I continue, when prices continue going bearish, I'm still taking more partials and letting the rest run. And interestingly enough, look what happened over here. Prices just go up like this, and I got broke even as soon as prices reached my risk zone. Now, the only reason why I didn't stick to this trade again is because, and you can obviously see how prices are continuing here with these trades that I've taken already. But if you look at this whole entire piece, prices are pushing bullish. We have a bunch of liquidity here. Normally, in price is taking out liquidity, it's pushing the market in a different direction or continuing in the intended direction, which is our major structure pushing bullish, right? It's normally doing that, right? But in this case, it stopped here, as you can see, in respect to the supply zone, and now it wants to go bearish. Okay, you'll see what happened here. So now this got the market took us out right here at break even. We made money, which is great, right? Now we're adapting to the new structure. All right, so right over here is what's really interesting. When price broke here, I was immediately telling myself, okay, what are we doing here? Okay, I'm either trading flips, liquidity, structure. I trade all. Okay, but whatever I'm seeing is whatever it's presenting to me is what I will have to react or act upon whatever it's providing me, right? And so in this case, you can see here, prices. We knew that prices this high here didn't break above this high. Excuse me, this low didn't break above this high. So what we had was this price respected the supply zone. And when we see something aggressive like this, all right, we see now that price just took out more internal liquidity. It could push bullish, but it actually broke bearish here, as you can see right over here. All right, so when price broke bearish, I was just analyzing the thing and watching to see, okay, what's happening right in here. I want to be able to take the next trade, right? And I quickly see here we have liquidity, right? So normally when price takes out liquidity, we wait for the aggression, right? We wait for the aggression, and then we wait for the price to test the market, right? And you can see it right here, liquidation, right? And there's that aggression, and here's where price, this huge wick left, right? This is where my sell was. So you can see I took a sell here, and I left my risk right running above just in case price had to take me out, right? Again, I don't use a stop loss. I'm just in it to win it right now. Let me go back on the 5 seconds right here. All right, let's continue here. All right, and you can see here, my natural intention was to target this low right over here because we didn't know what was going to happen. If price is going to come and test this wick and then push bullish, right? Due to the fact that we have this huge aggression after it took out all this liquidity, all right? And so it could have had the intention to push bullish here, right? So I targeted this low here. I broke even, and I'm breaking even as soon as price breaks, and I'm also taking out partials. And then, of course, this was our last area here to take out the rest of our capital here. So once we hit this demand zone right over here, then that's when we ended this trade, okay? And I tried to hold it down, but it wasn't at this low. It was right here precisely. All right, so this was a good, what was this one? A 6.6%, and this was roughly about, I took the rest of the partials here, so about 5%. So anytime price pushes more aggressively to the downside or upside, I always take out partials for the mere fact of paying out myself, right? Because I did so much hard work to try and do to get this trade, right? So why don't I pay myself along the way? All right, so what I'm doing right here, as you can see, is when we have a break, I realized we had a flip. Here's a flip. This area, this is where there was a lot of buyers that were involved, that the buyers failed to break out this high here, right? So instead they failed and they flipped and pushed bearish, taking out this low, which means now that we have to ask ourselves, where's that last buy, right? Where's that last order block? Well, it'll be in here, because this is the area that buyers were trying to break above the high here but failed and they flipped. Now this is where I was looking to sell next. So as soon as price came in here, I was immediately interested in selling here immediately. I sold as soon as price flipped bearish here, or this candle flipped bearish like this, and this is when I was just in it, right? So again, my rule is once price breaks below here or at this area, I'm break even at all times, okay? I'm breaking even. So if prices do go against me, I have to break even, okay? But what I also like to do is once price reaches the this low here, right, at break even, I do pay myself out some, right? Just so I can, just because I like to, I want to pay myself because I did all the hard work, right? So once prices kept going bearish, I kept at it. I don't know why I stopped here. It's actually here. All right. So once prices kept going bearish, I was excited, right? I let the rest run. You can see how bearish prices are going here, and I'm excited because now I'm like, yeah, this is great. We're making a ton of money. And I was targeting this low. Actually, I was targeting this low first before I adjusted my demand zone right there. So this is the low I was targeting originally, and I'll explain. Let me just move this over here for a better, no, hold on a second. Hold on. Come on. Right there. Okay, that's my demand zone. Okay, so prices tap this demand zone right now. I'm thinking to myself, okay, well, if prices should ever go against me here, I'm always going to break even, no matter what. There's no point to holding this trade, even if it goes all the way up here. And now you're going to have to think to yourself, okay, well, I have to hope, and then thinking that price should return or reverse. No, if it ever goes against you, get out. Okay, so here's what happened. Prices are lingering around here. I'm in good position here. I'm in good standing position. Now let me zoom out. So we TP'd here for the rest of the trade. When I zoom out, you can see here we had a break of structure, right? And this is an area where we call and deem this as a flip on the higher time frame. So I was on the 1 minute to see this because, as you can see right over here, we had price where price tapped this supply zone, came back. Then we had this area push right over here in the same supply zone, rejected, pushed bearish, and then flipped all of a sudden. So this would be considered our flip. It was either this area of demand zone or this demand zone or this demand zone here. And you can see here, this is the main low that was responsible for this break of structure, right? This is the origin of the low that is responsible for this push right over here. So you can see over here too, we had a flip right over here at the chalk. There was a flip, unmitigated order block. So this is the one that I was really looking forward to targeting. I also had an area where prices swept here. Okay, the market swept this liquidity right here, okay, right there, and then prices pushed bullish. So And then, of course, you can see in here, this could also be considered as the order block, right? Because there's nothing that mitigated. This was where prices pushed. This would be called a sell to buy right over here. And you can see prices did react. We would have been taken out, all right? So I waited patiently for this move right over here. So what did I do? Once price got here, I said, I know this is a flip. I know this is guaranteed to go bullish, so we got to take it. So as soon as it got there, I just pretty much entered the market, right? And I like to enter my trades manually, not automatically, where I'm waiting for a buy here, right? And I have a programmed buy here, a buy limit order, here to take me to go up, right? I like to do everything manually. So of course, when prices go up, come at this high here, I'm already at break even. I take some of the partials and I let the rest run. And I was generally targeting this high only because that was our next high, right? And this was a pretty good trade. I love when the markets do this kind of stuff. They just push bullish like really fast. Okay, now the only reason why it went this bullish, okay, a lot of the times is because when there is liquidity involved, right here, there's a low and another low. This low failed to take out the high, so it flipped, and this is where the next buy would be, okay, because we're in a bullish market. So the reason and the cause for this market to push so bullish like this is because of liquidity, okay? And these are one of my favorite methods to trade is liquidity, okay? So we hit TP right here at 8.6%, and then we called it done, all right? We took our rest of our money, and we're done at this market. So when I scalp, I generally like to take about 2 to 3, sometimes 5 trades maybe within a day and then be done, because within if you think about this, the banks trade within the first hour or two. I think it's roughly about an hour, 2 hours maybe, and then they stop. They literally stop. Okay, and if you notice, the markets are very slow, right? Only because the banks aren't involved anymore. Now they're just letting the whole market, they're just lingering, and the market is just lingering, right? And so that's why I'm finished, is primarily because of the banks. When the banks finish, right, I'm done. And that's it. Yeah, so I hope you guys enjoyed this video, and I hope it was a bit educational, and you guys kind of understood why and how I take entries and or how I trade, all right? If you guys really like this video, please throw a thumbs up to this channel, really, and to this video particularly, and definitely subscribe to this channel because we always give out free content, guys. Until then, I will see you in the next video.